Just when you thought interest rates couldn't get any lower, they've just hit a historic low in Australia. In this video, I'm going to go over how interest rates are still falling in Australia and where I think they could be going in the future. If this video brings you value, please drop a like for the whole YouTube algorithm. It really helps out the channel a lot. Comment your thoughts below. Where do you think interest rates are going? Do you think inflation's going to rise and they're going to have to lift interest rates? Or do you think if another economic shock happens, they're going to drop interest rates into the negative? And subscribe for the latest property market, personal finance and investing content. Alrighty, so home loan rates fall to record low 1.69%. That's right, 1.69%. That's pretty much below inflation, so they're almost giving away money at this point. And who knows, could interest rates drop even further? Let's have a look. Chasing a lower interest rate should be on the radar for homeowners and buyers as rates drop even lower to rock bottom figures. So the property market just got another boost with the lowest home loan rate in the market dropping to 1.69%. And for something you have to be aware of, for every 1% drop in interest rates, house prices can go up 10 to 15% because people can borrow more and they can have more capital to bid up property prices at auctions and also to put more high offers on properties, because as they normally don't borrow what they can afford, they normally borrow by what the bank says they can borrow. Lender Greater Bank announced the new market leading rate of 1.69% on Tuesday, following a cut of 0.2% on its 1-year fixed rate for owner occupiers paying principal and interest. With fixed rates continuing to lead the market with low rates, now could be an opportunity for mortgage holders to fix all or at least part of their loan. And if you're wondering why fixed rates are falling so much, that's because of the RBA's term funding facility and also because of their quantitative easing, where they're buying government bonds to drop the yield on the 1, 3, 5 and 10 year government bonds. And so when they do that, they can offer funding to banks at 0.1%, and then that means that banks can offer cheaper mortgages or mortgages with a lower interest rate so they can keep house prices going up. And then that has a wealth effect on people. People refinance their house, spend money on upgrades, renovations, new cars, holidays, interstate holidays, I guess you could say, because you can't go overseas at the moment. And that's why we are seeing the drop, because of what the RBA is doing right now. So interest rates will remain at rock bottom for the next 3 years, though fixed rates are likely to rise before variable rates do, as a longer term bond market starts to anticipate money tightening a few years ahead. So what do you guys think? Do you think they will raise interest rates in 3 years, or do you think the economy can't afford for interest rates to rise? And hey, if the interest rates do rise in 3 years, that's definitely going to have an effect on the property market, because it works with one way. With interest rates dropping, prices can rise because people can borrow more. But if interest rates rise, people can borrow less, and then that will put a downward pressure on prices. But hey, if property prices go up 20-30% in 3 years, it may not be that much. It may not have that much of an effect on people buying right now. Today's move from Greater Bank proves competition is still rampant in the home lending space, and it may make sense to lock in either some or all of your home loan if you want to take advantage of these rock bottom fixed rates before they swing the other way around. Now, if you think interest rates can't get any lower, in Denmark, they actually have interest rate mortgages of 20-30 years of 0.5%. And they actually have a 10-year fixed mortgage at a negative 0.5%. So if you think interest rates can't get any lower, who knows, if there is another shock to the economy, we may see the RBA go into negative interest rate territory. And you know, I know the RBA is saying they won't do it, but they also said they weren't going to drop interest rates to zero, and they also said they weren't going to do quantitative easing. But if all the other central banks drop their rates negative, the central bank will have no choice but to do so as well, because the Aussie dollar will get too strong. Ms. Sahos said it's important to understand other rates on offer from the lender offering competitive fixed rate. So new research shows 91% of lenders on canstar.com.au allow borrowers to split their loan. The analysis reveals that some lenders allow borrowers to split their loan up to 10 times. The cost of setting up a split loan is around $213 on average. So what do you guys think about these split loans? Do you like them, or you're not really a fan? And the cost of splitting your loan is something you definitely have to take into consideration. If the lender offers a suite of competitive fixed rates, then you could consider splitting your loan across several fixed terms and even a variable rate. This way, after the 1 year fixed rate expires, you're not exposing the entire loan to whatever the market rates are at the time you've locked in the various terms. The benefit of splitting the loan is that you may be able to add extra repayments while still getting a low rate. And that's something that I could see definitely beneficial to a lot of people that definitely want to bring down their mortgage. With your loan split into multiple fixed rate terms, the added bonus is that your lender allows extra repayments during the fixed terms. You're effectively doubling or tripling the amount of additional repayments you can make, she said. Of course, be sure to weigh up any account fees first, as this could offset the savings. And that's something you definitely have to do. Alrighty, now let's get into the juicy content, something you're all wanting to know, the best rates on offer right now in the Australian home loan market. Okay, so Canstar data reveals there are 138 home loan rates below 2%. So definitely, if you've got an interest rate with a 3 in front of it, you definitely got to call up your bank. They don't reward loyalty these days. You have to haggle to get these low rates. And it's definitely the same with other things like electricity, gas, water, Foxtel. There's no reward for all of these days. You got to haggle. So the lowest home loan rates on the market for owner occupiers include Greater Bank, UBank, Homestar Finance, HSBC, and Pacific Mortgage Group. Okay, so UBank has a 3-year fixed rate at 1.79%, and the comparison rate is 2.22%, and that's for an LVR of 80% or less. Homestar has a variable rate, which is pretty good at 1.79%, but you have to have an LVR of less than 60%, which not many people will have. And HSBC have a home loan rate of 1.88%. So Canstar Group Executive of Financial Services told news.com.au that home buyers should be paying around 2% mark for a home loan and definitely not in the 3% range. And that's exactly right. And this is something that's interesting. In 2015, the average interest rate was around 5%, and in 2020, the national average was 3.32%. That's a huge difference in your buying power, he said. And this is why we're seeing house prices come back so strong, because interest rates are really hitting rock bottom and people can borrow more and they can leverage up and they can go out there and pay above reserve at auctions. Now let's get into the latest lending data to see what's going on in the property market for lending. Recent Australian Bureau of Statistics data showed that new home loan commitments have reached record highs as low interest rate environment and government incentives spur on a flurry of buying activity. The ABS data showed new housing loans for December sought 8.6%. Wow, that's definitely a big increase, 8.6% for the previous month, with 26 billion added to the nation's lending book. Owner-occupier loan commitments rose 8.7% in December and are at the highest level since 2009, with Victoria having the largest jump. And that's something I definitely see interesting. The Victorian economy is the one growing the weakest rate at the moment, and house prices aren't growing too much. But we are seeing a big increase in lending, and maybe that's due to a lot of people building out into the regional markets. ABS Head of Finance and Wealth said loans for newly constructed properties had more than doubled since June 2020. What? More than doubled? That's just definitely showing that this home building scheme is being a big success. I know a lot of people that are building right now. They're just seeing the money and going out there and taking it. And we're also seeing an increase in land prices. The federal and state government measures such as home builder and historic low interest rates are supporting ongoing growth in their housing loan commitments, they said. Wow, so this is crazy, guys. I remember last year we were thinking that, house prices would crash, but, like I said, it's not a free market, the Australian property market. The banks jumped in, the Reserve Bank dropped interest rates, they created their term funding facility so banks could do this, drop interest rates to lift up property prices. The government jumped in and gave out the home builder grants. So we're definitely seeing a part of their economic recovery tools is the property market. Because if your house price goes up 100k, I'm sure a lot of people, probably not a good thing to do, but they'll refinance their house, they'll do renovations on their property, buy new cars, go on holidays, and it has that wealth effect. So what do you think? Do you think all these low interest rates is going to lead to high house prices? And do you think it's possible for interest rates to fall even lower? Or do you think if another shock comes that the RBA could drop the interest rates for the first time ever into the negative territory? For all my loyal viewers and subscribers still watching, you're awesome. And if you haven't already, please smash the like button for the holy YouTube algorithm. It really helps out the channel a lot. Comment your thoughts below and subscribe. I'll keep you all up to date on the latest property market and economic news in Australia, and go over wealth building strategies like personal finance and investing. And of course, I'll see you all in the next video.